Hey everyone, and welcome back to the AI Tech channel. Are you ready for another wild ride into the world of artificial intelligence? Today, we're tackling a big one. OpenAI is actively seeking feedback on its AI models. Now, on the surface that sounds like pretty standard procedure, right? But what's really going on here? Is this just routine maintenance, or are we looking at something much, much bigger? Something that could fundamentally reshape our jobs, our economy, and even our society? Stick around, because we're about to break it all down. First, let's get into the headline. OpenAI is asking for your help to improve its AI models. That's right, they want your feedback. But the real question is, why now? What are they working on that's so important they need input from the wider world? And what are the potential consequences if they succeed, or if they fail? Okay, so the immediate impact of this announcement was pretty dramatic. Remember that whole butterfly effect thing? Well, OpenAI's announcement caused a literal surge in the AI-related cryptocurrency market. We're talking about tokens like SingularityNet, or AGIX, and Fetch.ai, FET. These weren't just minor blips. We saw serious spikes in trading volume and price. Within the first hour, trading volumes for AGIX and FET went through the roof. The price of these tokens jumped significantly, showing that investors are seriously betting on the intersection of AI and crypto. Technical indicators, like the Relative Strength Index, or RSI, and on-chain metrics, all flashed bullish signals. This wasn't just hype, there was real buying pressure. Investor sentiment shifted dramatically towards optimism about AI's integration into the crypto space. It was like someone flipped a switch, but the impact didn't stop there. The AI news created a ripple effect across the broader crypto market. Even major players like Bitcoin and Ethereum saw slight price increases. The success of AI-related crypto projects could also influence investor perception and funding for other AI-focused tech companies. Think about it. If AI is driving up crypto values, it signals to investors that AI is where the smart money is going. This could lead to even more investment in AI development and research. And naturally, more companies will be looking to integrate AI into their business operations to stay competitive. It's a chain reaction, and it all started with OpenAI asking for feedback. Now, let's zoom out and look at the bigger picture. What are the long-term socio-economic consequences of this AI push? Well, for one thing, the correlation between AI developments and crypto market movements is creating new trading strategies and investment opportunities. Smart investors are paying close attention to AI news because it can directly impact their portfolio. But the market reaction to OpenAI's announcement also raises broader public awareness of AI's potential. People are starting to realize that AI isn't just some futuristic concept. It's here, it's real, and it's already impacting our lives. And this is where things get a little more complicated. The adoption of AI in the workplace could lead to job displacement in certain roles. We're talking about automation taking over tasks that were previously done by humans. But it could also create new jobs in AI-related fields. This means that workforce retraining and adaptation are going to be crucial. We need to prepare people for the jobs of the future, not the jobs of the past. And the potential economic benefits are massive. McKinsey research highlights the potential for $4.4 trillion in added productivity through AI in corporate settings. That's trillion with a T. But to realize that potential, we need to address the ethical and regulatory considerations. The growing influence of AI necessitates the development of ethical guidelines and regulatory frameworks to ensure responsible AI development and deployment. We can't just let AI run wild. We need to make sure it's used for good and that it benefits everyone, not just a select few. Okay, let's be real for a second. This whole AI revolution isn't all sunshine and rainbows. There are some serious risks we need to be aware of. First, let's talk about technical risks. Relying too heavily on short-term data, like the spike in crypto prices after the OpenAI announcement, can be misleading. The cryptocurrency market is inherently volatile, and what goes up can come down just as quickly. Also, we need to be critical of our data sources. Are they accurate and reliable? Data manipulation or inaccuracies could lead to flawed analysis and bad investment decisions. And let's not forget about model bias. AI models are trained on data, and if that data is biased, the model will be biased too. This can lead to unfair or discriminatory outcomes. From a business perspective, the risks are just as real. The cryptocurrency market is subject to evolving regulations. Changes in regulations could significantly impact the value of AI-related tokens. And we can't ignore the possibility of pump and dump schemes. The rapid surge in trading volume and price increases could be a sign that someone is artificially inflating the price of a token and then selling their holdings for profit, leaving other investors with losses. Remember, correlation does not equal causation. Just because AI news is correlated with crypto market movements doesn't mean that AI news is the only factor driving those movements. There could be other factors at play. And finally, AI-related tokens may have lower liquidity than major cryptocurrencies like Bitcoin and Ethereum. This could make it difficult to buy or sell large amounts of these tokens without significantly impacting their price. And then there are the ethical risks. Analyses like these could be interpreted as investment advice, which could be misleading if not accompanied by appropriate disclaimers and risk warnings. The information could also be used to manipulate the market by spreading false or misleading information about AI-related tokens. And we need to be transparent about potential conflicts of interest. Are the sources used in the analysis unbiased? Are they disclosing any financial interests they may have in the AI crypto market? These are important questions to ask. Now, let's shift gears and talk about AI in the workplace. McKinsey calls it superagency, but the idea is that AI can empower people to unlock their full potential. Sounds great, right? But there are challenges. Integrating AI into existing workflows and systems can be complex and costly. And using AI in the workplace raises serious concerns about data security and privacy, especially when dealing with sensitive information. AI models are not always accurate or reliable. Errors in AI-driven decision-making could have significant consequences. And relying too heavily on specific LLM providers, like OpenAI or Google, could create vendor lock-in and limit flexibility. From a business perspective, implementing AI solutions can be expensive, requiring investments in software, hardware, and training. Many companies lack the expertise to effectively implement and manage AI solutions, and employees may resist the adoption of AI, fearing job displacement or a loss of control. It's natural to be worried about your job being replaced by a machine. And let's be honest, the return on investment for AI projects can be difficult to predict, making it challenging to justify the investment. You need to show that AI is actually going to improve your bottom line. But the biggest concerns are ethical. AI could automate tasks currently performed by humans, leading to job displacement and social unrest. And AI algorithms can perpetuate existing biases in data, leading to unfair or discriminatory outcomes. The decision-making processes of AI algorithms can be opaque, making it difficult to understand why certain decisions are being made. This lack of transparency can erode trust in AI. And collecting and using employee data for AI-driven applications raises concerns about privacy and surveillance. We need to make sure that AI is used to empower people, not to control them. So, what's the takeaway here? Well, we need to be realistic about the potential benefits and risks of AI. We can't get caught up in the hype. The AI hype cycle can lead to inflated expectations and disappointment when the technology fails to meet those expectations. We need to carefully evaluate the credibility of the sources we're relying on for information about AI. And we need to remember that AI is not a silver bullet. It's a tool, and like any tool, it can be used for good or for evil. It's up to us to make sure that it's used responsibly and ethically. The date of publication also matters. The information we're discussing today may be outdated or inaccurate in the future, so we need to stay informed and adapt to the changing landscape. So, is OpenAI's quest for AI dominance a revolution or a recipe for disaster? The truth is, it's probably a bit of both. The key is to approach AI with a critical eye, to understand its potential and its limitations, and to address the ethical and societal challenges it presents. We need to invest in education and retraining so that people can adapt to the changing job market. We need to develop ethical guidelines and regulatory frameworks to ensure that AI is used responsibly. And we need to foster a public dialogue about the future of AI and its impact on our lives. The future is unwritten, and it's up to us to shape it. Thanks for watching, and don't forget to subscribe to the AI Tech channel for more insights into the world of artificial intelligence. What do you think? Is AI a threat or an opportunity? Let me know in the comments below.